Stream is live. Hoo-wee. Let's get to it. Okay, and put the link at the top.
This is the biggest challenge
Hello, what's up, man?
and maybe complete that challenge. Whether we realize it or not.
All right. Where are we at? Got
See the screen.
here. They will not. Okay, I guess I gotta reopen Twitch because they will not swipe me up. There we go. Swipe me up. Okay, putting the link at the top now. So, Alicia, we're gonna talk a little bit about how we got to understand what to do with your entry there, right? So y'all can understand understanding limit entries a little bit more. All right. Oh, okay. Look at y'all over here. You know, it's been a minute since I seen y'all in the chat. You know, the chat been tumbleweeds for 18 years. You know. What's up, Cecily, Terrence, Kenneth, Alicia? What's going on, guys? I see y'all. Yeah, the chat been the chat's been absolute tweets. Terrence, this is the study guide I'm talking about right here for the record. Right? The ultimate study of the pro-pivot indicator. Right? A manual for the modern trader. Yes, sir. It is the one. Now, well, okay. So, like I was saying, so we're gonna make sure that we touch on what happened last week. I introduced something new to you guys, you know, and I used the pro pivot indicator to get that done. Right. And I think Alicia would agree it worked out to perfection. Hmm? What you say, Alicia?
I agree, totally.
Worked out wonderfully. That was near the best entry of that particular move, right? So we're going to talk about that. And for the record, I didn't take the same entry, right? It was one of those for those who dare moments. And Alicia said, "I dare to do this." You know what I'm saying? So shout out to her. All right. But you know, it's not a strategy that I don't use. It's just, you know, that particular day, you know, I prefer to take the what do you call it? The key close, right? But I introduced limits to you guys, and in specific because Robinhood has a new feature. You know, for those that use Robinhood, Robinhood has a new feature, right? That allows you to trade limits automatically with a ladder. Beautiful stuff. Absolutely beautiful stuff. Now, so you guys are already familiar with the new squeeze and trend filter. Um, now we're we're doing a study, like I said, on the 5 day trend. Okay, we're doing a study on the 5 day trend, and we'll soon be doing a study on the 8 day trend as well. Well, the 8 day SMA, I meant to say as well. So we'll be changing that to an 8 day pivot point average, right? Or PPMA, pivot point moving average, which is going to be a wonderful addition. No, it's the ladder, LADDER, ladder feature. Um, so on Robinhood now, if you go and you click on trade for a company, you will see it has a ladder there. Right now, this is what we use with futures on Robinhood, and they just moved it over to stocks as well. It's a great new feature. Now, what this allows us to do is take the order at the current price, right? Or it allows us to just select a price that coincides with one of our key levels and set a limit order right there to either buy or sell. It is beautiful. Absolutely beautiful. Okay, you said you don't see it.
5:35.
Interesting. Is it only for T Triple Q? Because I've been trading a lot of T Triple Q lately.
Oh, let me look at teacher. Yeah.
Because I didn't check for anything other than T Triple Q. Oh, it might only be for T Triple Q. Okay. It might only be for it might only be for ETFs. Let's check SPY. Nope. Wow. Is it only on T Triple Q? Wait a minute. Alicia, it's gone.
Interesting.
Oh, is it only when the market's open?
Mm.
It could be only when the market's open. We'll check on Monday. Because I haven't checked it when the market was closed before. So I only usually look at it so maybe it's when the market's open. So we'll come back to that one, right? And I will try to revisit that. What's up, Deborah? Hola, hola. What's up, Janae? You used to have a friend named Janae. You ain't from Florida, are you? Let's keep going. All right. So now, what's up, Instacart? What's going on, brother? I'm gonna highlight a few things. I'm also gonna talk about now how do we handle risk management now that our 5 day ATR has been shifted into the red, and what does that mean for us, right? And that's why I tell you guys, like, you gotta be a little patient here, right? Because every single component of the pro pivot indicator will reveal itself at some point. There is nothing on this pro pivot indicator that's useless, if you get what I'm saying. Does that make sense what I'm saying? There's nothing here that's useless, meaning at some point every signal on this thing is gonna click. Every signal. Right? So I don't want you guys to rely on me telling you something today that may happen in a week or 2 weeks or 3 weeks, but when it happens, let's discuss it then. Right? Like I want to kind of take a normal progression with you guys. Does that make sense? Right? So that way we can discuss things in order as they happen. Right? So just kind of be patient from week to week, and you will notice every single signal on this thing is useful. There's not one wasted cell on this thing. Okay? So You see that 5-day ATR. You see it. You see it. Now let's talk about it. Okay. So, um, where do we begin? So let's actually start with the pivot points as usual. Matter of fact, yeah, I'm going to start taking a natural progression of just going through the pivot indicator from front to back, right? Every time we come in here to do a pivot point, because I mean it's not a lot to go through anyway, right? So as you can see, let's go to the QQQ. We're not going to do teacher Q. We're gonna do QQQ and SPY. All right. As you can see, we still closed below the weekly pivot last week. All right. However, however, this is still what I want you guys to remember is this is always going to be last week's pivot points until Sunday. On Sunday, you will get the pivot points for the new week. And I believe that next week we will open above the pivot point. Let's go and calculate this for ourselves. Okay. How do you calculate a pivot point? What do? You take the previous week's high, low, and close. You add those together, you divide it by 3. Let's do that. All right, let's do it. Let's do it. Let's do it. And here we go. So, you'll say the high was 618.42 plus the low, which is $600.28, plus the close, which is $617.05. All right. You divide the sum of those by 3. And guess what? Last week's pivot is $611.92. I repeat, it is $611.92. So we are going to be well above this week's pivot. In fact, we might be approaching the R1 as we open up next week. Let's take a look at that. So in order to calculate our R1 for next week, we just take that 611.92, multiply it by 2, and subtract last week's low. All right. Last week's low was $600.28. And you get, okay, so you get 623.56. 623.56 is the R1 for next week. So you're gonna be and so that's a slight bit of a slightly lower than this week's R1, but it's a wider range, right? Between the two there. All right. Now, I'm sorry, a tighter range between the two there, I meant to say. So now, okay. So that's what we see here, right? So we will open up, so next week, so we can see the bullishness that's here. Right? You can see the bullishness that we're dealing with. Now, okay. Let's keep going here. We're not pushing up on any deviations, but next week we're probably going to be breaking out of this high range. That'll be good for us, right? getting above the the 20 MA was a good run. We're back above the 50 MA. We're back above the 8-week average. Our trend filter in that regard is strong. Right? We have a strong trend filter going on right now. That's excellent stuff. Okay. Confluences to the upside. Everything is there. So next week we should just be getting our breakout swing signal, which requires us to be above the weekly pivot, at least. And once we're above the weekly pivot and the 20 period moving average, we can start getting some breakout swing signals from there. So it should highlight an immediate opportunity to swing to the upside. Now let's check out next week's economic calendar to see how this is going to look. Okay, we got GDP and global goods orders. So this could be a bit of a setback for us, right? As GDP may push back on rate cuts. See what I just did there? See how that works? Right? Just understanding the dynamic, right? What's been moving markets higher? Right? Strong GDP plus expectations of rate cuts. Both of them combined is what helps the market move higher. So when one pushes back, you may have so Tuesday may be I want y'all to write this down. Remind me. All right, remind me I said this. All right, Tuesday of next week could be a setback. We'll see. All right. As GDP, and you can write it down as such, Tuesday may be a setback as GDP and durable goods and industrial production may push back on rate cut projections. All right. You guys can write that down. Somebody write that down for me. I'm going to say it again. Tuesday of next week could be a setback for the market as GDP, durable goods, and industrial production could push back on rate cut expectations. Okay. And you see industrial production. What do we learn from the PMIs? How do I know that? How can I say that? What do we learn from the PMIs? What did they say in the manufacturing PMIs, guys? Anybody remember? About what did it say? Oh, go ahead, Kenneth.
There was increase in production.
There was increase in production. There you go. Right. That's it. Right. They said there was increase in production. Great job, Kenneth. Right. Remember, so certain things you don't want to forget. You can forget 90% of what they said. Forget 90% of what they said in that PMI. Most of it did not matter. Okay? What mattered the most was that increase in production. Okay? That's what mattered the most because that's what's going to keep jobs, right? If we're going to keep producing, well, it's going to at least stabilize the job market a little bit. They may not fire as many people as we think. And it's going to boost GDP. All right. So even if we see layoffs, we're getting layoffs with more production, which actually means, guess what that means, guys? That means higher productivity. Did y'all know that? I mean, of course, you guys knew that. You probably forgot, right? Remember, productivity is defined by how much work I can get out of an individual over a certain amount of hours worked. So if they're laying off people, but they're producing more, we have a productivity boost. So all these things that I'm mentioning is actually, right, a positive, especially if you're getting rate cuts. Okay? All right. So I'm just showing you guys how to align that with what's going on here on your pull pivot indicator. I don't have to think about that for 20 hours, right? How long did we talk about that just now? How long did we talk about that just now? What? 2 minutes? Just about 2 minutes. Okay? That's about a 2-minute conversation on what's happening from a macroeconomic perspective that can work with us here this week. So if we do get a setback, from this GDP and industrial production numbers, that's likely to be short-term noise. However, nonetheless, what will we not do? We will not give the market an opportunity to take more from us than the current regime suggests we should. Now, what do I mean by that? Let's talk about this point right here.
You said the current regime.
Yes, by regime, I'm talking about the volatility. So volatility regime.
Oh, okay. I know you was talking about
President. Okay, sorry. My bad. That's my fault. I can see that. I can see how you felt that. All right. So the volatility regime I'm seeing right here, right? So two things are happening. Do you guys see this? Look at the squeeze. And then that squeeze is going to be doubled by the fact that we're going to be right within the range. Okay, it's going to be doubled by the fact that we're in the range. So we got the squeeze going on. Okay, I'm just saying. Now let's get some confirmation here. Let's check all indexes. Do we have a squeeze on all indexes? This is what we do here. All right, let's check it out.
So that's not comparison right now will be a negative Dow theory. You can confirm the indexes, right?
Yes, plain and simple, right? In Dow theory, indexes must confirm each other. If there's a squeeze happening on QQQ but not on SPY, this may not be a broad market thing. It may be simply a tech thing because tech was crushed in the most recent weeks, right? So that tells us don't lean towards the market, lean towards tech. Oh, we got some broad market action. Check it down.
Yeah.
Check it down.
Coming in here on Saturdays and in the evening, I always putting everybody on thing.
Yeah, we try. We try.
So I've been hesitant. I'm like, I don't know what to do. Obviously we're at a pivotal moment. Like
Right.
we're right at the averages. We were gonna bounce off of them, we'll fall through, and I'm like, I don't know where to put my money. I don't know which way we're heading because we've been, in a sort of consolidation area where we've been stuck in the range, and I will be very happy when the range breaks and we do make a direction. Those are the easiest trades in the world. I just want to load the boat. You know what I mean?
Yeah, definitely. So what I'm looking for next week, Shay, is the breakout swing to the upside.
Yeah, I agree.
Right? We can get that breakout swing to the upside, we're gonna be good. Now,
So
we'll talk to
only things Correct. Don't chicken first. No, the only reason that I did.
Hold on, wait a minute. In the Matrix.
I'm walking car.
Yeah. Hold on.
Give me one second.
Yeah, I know you were walking outside. No, we can hear you now. You know what that was? That was just your phone disconnected from your Wi-Fi.
Yeah. That's right.
Wait, you talk now. We can hear you.
So, sorry. I wanted to go long for the day, for next week. So I was looking at it the way. So for one, the bottom on Friday was kind of flat, and you cursed me wrong. I don't like those. I will never forget that one time we were analyzing the charts and you mentioned something about a flat bottom, and then we came to close that thing and it was like all the way down. So, first, so it's only a few pennies difference from the open and the low on Friday. So, I didn't like that. And I was like, I can't go long here because Women wants to come and retrace that. You know what I mean? And I get so confused on, like, you hear people say the market is going to want to retrace the flat bottom, and they're also going to want to retrace the long wick. But I don't know about the wick thing. I heard one person say that. I don't know. I kind of
Don't believe that one. Let that one go.
That nigga ain't know what he was talking about.
Yeah. Let that one go. That one.
Yeah, they always go back to get the wicks. I'm like, the wicks? So I always wanted to go back and get the flat bottoms. And I've seen it in real time, but we got told every straight up.
Yeah, not every wick. It ain't gonna happen every wick.
But it's no wow.
Yeah. And I'm gonna explain that. I'm gonna explain that one actually. I'm gonna write that down. So I wrote down the flat bottoms. I'm gonna talk about that. Right. And then the wick theory. I'm gonna put down as wick theory.
Yeah.
Right. We're gonna discuss that. So why not every wick? That's gonna be the question. Why not every wick? And because all wicks are not created equal. Right. So we're going to talk about that because you have to understand that there's basically, when it comes down to wicks, you could be dealing with a as you'll see in the study guide that you guys are going to get on Monday, up thrust and springs. Right? Up thrust and springs, right? So basically, when it's all said and done, if we're actually in the midst of a turnaround, right? Sometimes those turnarounds are so strong, right? So this will be where Oliver Velez says a power bar, right? And most of them power bars are not going to get retraced. It's not happening. You ain't coming back, right? So you have to think like a wick with what type of a close is how you have to think about it. How do we close along with that wick, right? Now, indecisive wicks get revisited a lot, right? But wicks with a strong close, you're throwing a 50-50 out there, right? And so we'll go to the chart in a few. We'll talk about that. But I do want to. So let's point this out first here. We still have a little bit more work to do with IWM going into next week. So IWM and Dow may have had their heyday, like they got themselves some nice big moves, right? And now the market may be amidst like essentially dialing back here and moving on to SPY and QQQ. Alicia?
Well, you go to the SPY again because the trend filter was on there too, I thought.
Yeah. Oh, no. So I'm not just talking about the trend filter. I'm talking about the squeeze as well, right? So if you go back to IWM, right, you notice no squeeze. All right, you notice no squeeze for IWM. You'll notice no squeeze for Dow either. All right. Matter of fact, you got we're missing this current price, so you're missing some of that. But you know, for SPY, you do have the squeeze though. You see that? Yeah, we were looking at the squeeze mainly. So they still have some work to do on the trend filter for IWM, but there's also no squeeze there. So they may just kind of like, kind of ease their way back above that is kind of what I'm getting at. Yeah. Um,
Yeah, so they're not yet confirming each other.
right. They'll probably confirm each other on the weekly pivot, right? So the weekly pivot and the trend filter. So both IWM and SPY will likely get above that 8. It's just the 8-day right here. That's all it is. That's all they need. Just the 8-day. Both of them will probably get above the 8-day to start off next week. Trend filter now green. The difference between the two is when they get above that 8-day, what happens next? See what I'm saying?
Yes.
That's what I'm saying. That's what I'm getting at. And so we have a squeeze on SPY, no squeeze on IWM. So I'd be mindful of the small caps for next week. Give them some time to really settle a little bit there, and see if maybe there may be something to be a little more cautious about there.
So are you saying they're possibly a lag in the confirmation?
Yeah.
Okay.
Possibly a laggard for next week.
So I was trying to say lag. I'm sorry.
What did you say? I thought you said lagger.
Said lag, and then I said ing.
Oh, laggering. Oh, gotcha.
Just heard that.
It's all good. We ain't going.
Before it's too early. Let's go.
All right, let's keep going. Price action analysis. Okay, what's up, Kenneth?
Can you explain the trend filter?
Yeah, well, yeah. Let's talk
That's
about
one
that.
everybody just hopefully we understand what to do.
We're looking at SPY right now, but we're looking at a group of symbols. So check the link at the top. For the record, man, I invited you up because I like your name, man. I like your name. Yeah, we usually like when somebody comes in and we haven't seen them before and they raise their hand, we usually wait a little while. But I'm like, you know what? His name seems like he's gonna be a cool person. He's gonna be legit, So, see, he proved me right.
Was watching the stream. Just do you know where on the stream so you can see it?
Yeah, the link at the top, the Twitch.
I'm clicking at Twitch now.
Yes, sir. We live.
I'm gonna talk to you guys.
All right, appreciate it. Much appreciated. All right, now I'm gonna mute your mic for you because I know you're watching the video there. I got you. All right, now, so the only difference with is with QQQ here, right? The 5-day average to range. Now, price action, we are looking at charts as well, right? We got our charts up as well. This tool that I'm looking at right here, we built this tool to give us just give us all of our key levels, and we don't have to do all that work. You know what I mean? That's all this. Like, this is meant to give us all of our key levels and give us a quick rundown and analysis of the market. Right? That's what it's really meant to do. Okay. Now, so and every Saturday we talk about, like sort of swing trading opportunities and stuff like that. Now, so we were talking, let's go back to QQQ here. Let's go to the NASDAQ. So this is the big one right here. So we have a squeeze going on for SPY and QQQ. So S&P and NASDAQ probably have the biggest moves ahead of them. And that makes sense because look at that big move that the Dow Jones made above the high. Let's go take a look at those real quick, all right? Let's go take a look at those real quick. So let's go to the daily. We're gonna go from the daily here. So this is what the NASDAQ look like. This is what Qs look like. Never touch the high. Never touch the high. All right. Let's take a look at SPY. All right. Got to the high, but what? Couldn't break. Let's check out the Russell 2000. Let's check out these small caps. Broke the high nicely. Right? And now they're sitting at the resistance at this previous high all over again. So Alicia, that might be the resistance that we're seeing. See that? See that right there again?
Yes.
That might be the resistance that we're identifying. Now let's go to the Dow because this was the one right here. All right. So same thing. Broke the high. All right. Broke that high right there. And as you can see, same thing, sitting just below that high now, right? Having a little struggle trying to get back above that. Okay. So essentially what it seems like here is we got the QQQ, right, with a nice strong push, even if it's just going back towards this high right here. Right, that's a nice strong push. See how different this close looks for them on Friday than the Dow and the Russell. Much stronger close. All right, let's go with the SPY. Much stronger close and a long signal on the daily. For those that are watching for the first time, I always have to put this out there. This is not like some indicator that we picked up off of TradingView that tells us when to go long and go short. Okay, we actually built this indicator ourselves to match some of the things that we look at, right? So these are not signals that we're taking. Let's be clear about that. Because I know, like it kind of sucks sometimes when you're watching streams or you're trying to learn from somebody and they're pretty much just taking these random signals, right? So I always try to make that clear. We built this indicator ourselves. All right. So those are our signals that you're seeing. All right. So we got a nice long signal here from SPY as well. When we dig into the 4-hour, right, that signal's not there just yet because you're still below the trend filter. When you go to the hourly, you can see that signal clicked in around this area right here, right? And so you had a little bit of a pullback, but you still, were able to go from there. All right. So we were talking about this. So Shay, let's talk about what you was asking about. This flat bottom right here. All right. This flat bottom right here. So now the reason we look at these, like as these are areas that we could revisit other times. They don't have to be revisited today. So it all depends on the momentum you bounce from the flat bottom, right? So think of it like this. Here's how I want you to think about it. All right. So when we say flat bottoms, right? Here's what we're talking about. Essentially, it's called internal bar strength. I'm going to repeat that. It's called internal bar strength. So when a candle closes extremely close to the high or extremely close to the low, you typically get a retracement back into the range of that candle. The question becomes, how much momentum do you take into that retracement? Like right here, boom. Right, see how close you close to the top here? Instant retracement, boom. But this one took a lot of momentum with it. All right. So these flat tops and flat bottoms typically happen just ahead of big decisions in the market and stuff like that. Here goes another one right here. All right. Here goes another one right here. All right. So you push back into there, but you didn't take a lot of momentum with you. So you pull back to solve to resolve that flat bottom first, Shay. Right. But look at how much momentum you took into this one with you. All right. Boom. So there was a difference, right? Now this could be one that continues before actually retracing. So eventually, you're probably going to come in and handle this business. All right. This is probably going to be a demand zone for later on down the line, Shay. You with me? Make sure you're there.
I am.
Okay. Okay. It's probably going to be a demand zone for later on down the line. Right. So, and then how strong this area is going to be determined by how high we get. Can we break these highs? Can we break these all-time highs? If so, when we revisit this area, you're going to want to buy it. Let me pause on that. Do you understand that part? All right. Like, you're probably going to start looking for support and resistance in that area.
You said this. Tell me again. I got one.
Okay. Let me show you one more time. So we're going to talk about the difference between these two bottoms here, right? And you see this one right here? See this one right here? Same thing, right? So 3 flat bottoms that you can see, but one was not revisited. Okay? So what we're saying is,
Why did you say it was not revisited?
this one, the one that we're looking at, the one that you said you were like skeptical about. This one, right? Notice these two got revisited. Right? No doubt. Oh, and here goes one of them wicks that I was telling you about too. We're gonna talk about this. Don't know, Boom, gone, out of there. All right. Now, so what we have is what's known as internal bar strength. Now, let me pull the internal bar strength up for you real quick, so we can take a look at this, right? Explain concept. Really? All right. So while it's pulling that up, I'm just going to break it down for you. Basically, we're just talking about how do we close? How close to the low or the high do we close? That's what we're really talking about. Okay. So as you can see here, it's like an oscillator. It's like an indicator. Okay. So it ranges from 0 to 1. See that? Just like an oscillator, ranging from 0 to 1. So if it's a 0, the price closed at the absolute low of the day. Right? If it's a 1, it closed at the absolute high of the day. If it's a 0.5, it closed right in the middle. Now, this is a technical indicator that measures where a security's closing price falls within this specific trading range. It is primarily used for mean reversion strategies. Mean reversion strategies. The idea is that if a price closes at an extreme, it is likely to snap back toward the average the next day. Each time, what happened? Look, snap back towards the average. Snap back towards the average. But this one, see what happened here? See the difference there? Watch. So this is about the middle of this candle, is it not? By the middle of the candle, right? Right here, you reach by the middle of the candle here as well. All right. So what happens is you kind of snap back towards the middle of that range from that previous day. And oftentimes you'll revisit the low and then you'll go about your business, right? Revisit the low and then go about your business. Because either way you put it, this is an oversold condition. Now, in some cases, you get like what you have here, right? Where we went beyond the median point, and then we use the center, we use that middle as support. Let's go inside this bar, right? So this is the 17. Let's go inside this bar here. Let's go to the 15-minute chart. Wait. Let's mark the middle of that bar first. Would y'all say I'm gonna put a line here real quick, and I'm gonna use y'all eyes just in case my eyes are bad. Would y'all say that this is about center of that day? Let me zoom in. Am I about center? Am I about in the middle? Yeah? Okay.
Yes.
All right. So now let's go to the 15-minute chart. Okay. The 17th. Okay, here we go. Right here. All right. So this was that, right? We closed near the lows. Then look what happens. We bounce just above the median, just above the middle of that day. And then look at that. Oh, yeah. All right. Using it as support, using it as support, using it as support, and see you later. We're out of there. We're gone. Okay. That's what you probably missed right there, Shay, right? Always remember that. Does that make sense?
Yeah, there. So with the whole which I treated the same thing. I wasn't able to pay attention when you were talking.
Oh no, we didn't talk about that yet.
Okay, yeah, I got this. And see, that's why I didn't feel 100% confident in going long on Friday because I had flat vitamin. It's so, pointed out in the previous shop, like, hey, Fridays.
Yeah. The market will definitely take out flat bottoms. The greater majority of the time it happens right away. But you have. Go ahead.
Pointed it out, which eons ago, but I have been noticing it like crazy. Crypto trades, like.
Oh, those? Oh man. Let me tell you. Don't ever go against the flat bottom in crypto. And I'm gonna tell you why. The reason why is because it's too volatile. So basically the swings that are gonna happen in crypto are gonna be so large that you might as well wait for the bottom to be taken out.
Yeah. And it's almost.
Yes, ma'am.
Yeah, you see them a lot in Solana, right? And all of that. So yeah, that's one of my main trades. I still play with that.
Oh, and Shay, I want to point this out. The last thing I mentioned here was, so this bottom here, how well will it be defended? That's the question. When we finally revisit it, notice this bottom well defended. You know why? Because it was coming from, all right, look, let me come straight across. See that? It was a revisiting of this one, which took us to an all-time high. Okay? So oftentimes when you first revisit a level that took you to something like an all-time high, a monthly high, a weekly high, whatever it is, right? Oftentimes those levels get defended the next time because, as you'll see in the new study guide that I put together for you guys for next week, and well, would I be a Scrooge if I said, unfortunately, it's Christmas, so we won't be able to go through the whole thing? I'm a Scrooge, aren't I? It's okay. Let's keep going.
So, question, just in working with the concept of the bundles, we're also seeing
reflected in the anchor volume profile, right? And movements in the RSI. Right?
Right. So let me do this, right? So you see this high volume area right here, right? So if I were to go to the weekly chart, right, and this is around what, October, right? Let's go to the weekly chart for let's see here. So on October, so you see right here, this is what it kind of looked like here around no, that's November, I'm sorry, where are we at? Right here. Right, and here. So these 2 points here, here, and then you came back to revisit it here, and then you got your bounce back, right? So you're see this wick, and by the way, look at that. That was a whole weekly flat bottom, Shay. I didn't even see this one actually. I said I didn't even see this one actually. That was a whole weekly flat bottom right there.
Weekly, sir.
That ended up taking us to the all-time high.
Okay. Okay.
Right, we
right back down.
we revisited the next week, and then we left. Then we went. What can What can you say? What can you say now? And the more specific element is you're looking for flat bottoms, bearish closes, flat tops, bullish closes. Those are the more those are the ones you're really looking for too. Just for the record. So you notice this flat top right here with a bearish close didn't really, it got revisited later, but a flat bottom on a bearish close is gonna be revisited a lot sooner. You see what I'm getting at? All right. Now, here's what I was saying here. So you see how this one took us to an all-time, no, so where is it at? This one right here took us to an all-time high right here. Okay. Now, in this particular case, when you came back down to revisit that, now you can look at that and say, okay, we're likely to see this be defended. You will see this in the study guide for next week. Why do they defend these levels? Right? Because those who are buying this are still very bold. I'm gonna say it like that. They're still very bold. Bold individuals. Right? Because we all know we were like teetering on a bubble, right? So if you're still buying this, yes, you're willing to defend this. Yes? All right. So we come down here. Yeah, let's defend that because we just started buying. Right? So we're thinking about the ones who were late to the party. Right? And so once the ones who are late to the party get exhausted, then we can think about market corrections. Then we can think about those types of things. Now, Cecily, you were going to ask a question. I'm just going to say one more thing here, right? Hopefully you remember that.
Yeah.
So we're thinking about the same thing here. Where does this take us? This right here, this close? Where does this take us? If it can get us to a new high, we're going to think about the same thing that happened here. When we come back to revisit this level, what are the key support and resistance areas around it? Because then it's more likely to be defended because the people that were buying here took us all the way to a high. Now we're more likely to defend this level and then work our way back up from there. Okay, Cecily.
Now, I was just, if you go back to the large candle around November 19th, I just have a question.
Yes, ma'am. Right here.
Yeah, there's a little lag on my screen, but that's okay. So flat bottoms for me also can lead to 180 reversal. So this looks like it took 3 days to do it, but we had got a 180. For you, right?
Yes. Right. Even if it's 3 bars, it's still a 180. Right. Or you can just say red bar. What's the word?
Ignored.
There you go. Right. Got a red bar and it was ignored. Right. Now you could be waiting until this point to take this position, but when you see a flat bottom, right? We bought this day. Right. This was the day we bought on this red day right here. Right? It was confluence. You have the previous low that took us to the all-time high. You have the close near the lows, which means mean reversion incoming. And then we had other levels that were helping us out. And again, so you can see how this doesn't take. So like, it may take a lot of words to explain it, but let me make this very clear to anybody that's watching, that's listening right now. Let's make this very clear. It does not take a lot of thought to take action on it. All right. As much time as we're spending talking about it, we don't spend anywhere near as much time analyzing it. When it's happening in the moment, this is a very quick decision. We were already pointing out this low before it got here. And we're just waiting. We're just waiting. Now let's talk about these. I wonder if she's actually on the phone or not. We're going to talk about these wicks. I think she might be on the phone. So while she's on the line, right? Anybody have any questions that they want to, throw out there, based on what we've talked about so far? Any questions at all?
No question, but I appreciate the continued reinforcement of apply what we get on the indicator with what we know. So very helpful.
Yeah, you gotta apply with what you know, because it makes it so much simpler. So much simpler. Like this week, we knew that the CPI would likely have a positive impact on the market, right? So we were willing to buy these lows. We're willing to buy these, you know what I mean? Basically, your GDP and all these other factors, are still in favor of the economy. Your production is still in favor of the economy, and your other economic indicators are in favor of rate cuts. Hey, we're willing to buy it. All right, but we just got to just buy it at the right levels. We're not just going to buy it just because. Right, you got to do the right thing as well. Make sure you have the right, make sure you have the right levels in mind. Oh, you know what? While we wait for her to get back, let's talk about this this key level that we pointed out for that buy, Alicia. Let's talk about that. All right. So, okay, where are we at here? Let's go to 15-minute chart. Okay. This was it right here. Okay, this is it right here. Yeah. First 15, second 15. Okay. So this candle right here closes above the bullish key level, right? So we're talking about opening range breakout. We're talking about opening range breakout. So this candle right here closes above the bullish key level, giving us a signal for the opening range breakout. Now, the difference is the size of this candle here. Right? That's the difference. The size of this candle. All right. So candles of this size often have some level of retracement. The amount of a retracement that you might expect will be determined by, ready for this, Cecily? The follow through. Okay. The more follow through you get, the more shallow the retracement will be. If it's an immediate retracement, it's going to be a deeper retracement. If you get some follow through first, the retracement will be lighter. Either way, this is power right here, right? This is strength. So we don't expect a full 180. That doesn't mean you won't get one. Losses are losses. You're going to take them one way or another. Okay? So it doesn't mean that you won't get a full retracement, but it's not expected.
So, I'm sorry, again, I'm getting a little lag. So you're talking about probability off the large green engulfing candle, right? Where Oliver would say, draw the lines for probability of continuation to the excited.
Yes. Yes. So now, so the next thing we did was, okay, cool. The high here was the bullish key level was I can't remember what it was. Let's see. This one closed at 679.48. I think it was like 679. I think it was like 679. What was it? It was like 74, I think it was, right? Like 679, 74, something like that, right? So closes above that. So we start looking. So what's the key levels below 679? 679, 74. What's the key levels below that? Right? No. Wait. We're supposed to be on Qs. I'm like, why? Supposed to be on T triple Q. I'm like, why don't I see the That's what it was. No, don't laugh. Y'all wasn't gonna say nothing.
Listen, I'm just looking at it. But, man, I'm still thinking about the November 19th. I want you to go back to that one when
All right.
I mentioned, yeah. Let's
So yeah. So let me see here. So 53.
we're really supposed to be looking at the cues, right?
Yeah. T triple Q. T triple Q. I got it open right now.
Yeah. So I'll see it in a sure. What I see on your screen now is the chart for the cues. I see teacher.
No. This is T triple Q. Basically. Look, you got this is the Ultra Pro. See, this is Ultra Pro teacher.
Yeah. I'm sorry. Go
Right.
ahead.
So yeah, okay. I think the close. I think it was 53.37. Alicia, I think that's what it was. 53.37. Now we're cooking.
Okay, and see where you drew that horizontal line? Right there. Using the Oliver method would have told me also we could still go to the upside.
Right.
We had not more than 55% retrace that beautiful what I would call a gift candle.
Right. Now the follow through, Cecily, this little bit follow through right here is what led to me looking for a more shallow retracement here. Okay.
Go on.
So if for example, right, let's say, see how this candle started coming back immediately? Let's say it just started coming back, then you likely retrace that 50% that you were talking. All right. Now look.
Yeah.
See that? Look at where my mouse is, and look at the eventual retracement. Right, it was 50% pretty much.
Okay.
See that? Now, so here's the reality. We say, okay, so 53.37 was the 53.37 was the bullish key level at the time. We closed above that. So you either enter now that we close above the bullish key level, or you wait for a pullback. So we take
Reaching for engine right there, right?
Well, so right here we have like 53.23. Let me see where this thing was. This it was 53.
I was 52.97.
52.97. Yeah. Okay.
Okay. Nice.
So around that time, we had the 20 MA was at 53.06. I remember that. right? I remember that much. I don't know which. Oh, here it is. The 50% retracement. There it is, right there. Alicia, there it is, right? We also had the monthly.
Uh-huh.
We also had the monthly pivot at 52.74, right? But who knew you would have went back to what do we? Yeah, 52.82. So if you would have chosen the 52.74, you wouldn't have gotten it. You see that? You get a low of 52.79 maximum. So there's a
It's for limit order.
there you go.
Yeah. My goodness.
Now you see we cooking. All right. So you have your 52.97 here. Market pulls back, breaks 52.97. You get in. All right. Good morning, Ajalo. What's up, Prince? What up? What up? Right here, man. So yeah, we just talking about Alicia's amazing entry the other day. You know what I'm saying? You know.
It was pushing. It really was.
I hear
them. What's it like?
Yeah.
Sir.
Yeah. So it's 52.97 here. So now you can see how Alicia, you didn't want to go any deeper than that, right? Because if you would have went for the monthly pivot, you wouldn't have gotten it. Right, you had your micro trend at 52.81, but I don't think this is the one that we had from yesterday. I think this is the one after yesterday's close. So I don't think the micro trend was at 52.81. Either way, we don't use these like that anyway, right? We use them on the way out. Look at Cecily. Look at Cecily. Oh, goodness. So yeah, you take it and you live with the results from there. So this is the perfect example right here. So now you have this perfect entry at the retracement, and now on Monday you look forward to a gap up.
Good candle ignoring.
Mm-hmm. Yep. That one I did notice. And if we go to the 5-minute chart, check this out. Yeah. All right. We almost had a clearing here. All right. Came close. Very close. It was very close. But see these wicks right here? This is what I was telling Shay right here. Look at this wick. Look at this long wick. Yeah, we'll come back next week. As soon as we're done doing everything else we want to do with all these wicks here. Right. And so this is what I mean when I say all wicks are not created equal. I didn't get to tell her, but basically, you got to think are we talking about a longer time frame or a shorter time frame? You know?
What did you type in there?
Where? Unicorn?
Something. My mind. You know what? Don't watch these.
You sure? You don't want to know? I think Alicia wants to know. Alicia, you want to know, don't you? You want to know, don't you, Alicia?
I do.
She wants to know. She wants to know. See, I told you, that this is the new corrupted Alicia. We like it. So basically, there's this ICT concept known as the unicorn, right? It's an ICT concept known as the unicorn. And so basically, you know how I feel about this. Like basically, he takes concepts that already exist and just puts a new name on them.
Yeah.
Right. So it's really just a false breakout, right? Followed by a change of character. That's all it really is, which is something that we was already trading anyway. Right. So I guess since ICT is the one that changed the name, now I guess it invalidates the fact that we were already trading it, right? So, all right, cool.
Yeah.
No. So we're gonna call it a puny corn from now on, man. That's a puny corn.
I can't unsee that.
Oh goodness. Where? Wait, hold on. Let me see.
Lisa, beautiful choice.
Wait, where was this at here? Oh, look at the key to the trend right here, held up, nice. We never got there. Love that. What's up, Moji? What's up, Dish? What's up, boss?
Stop here. I just switching between Twitch listening and coming. I wanted to see what Cecily was doing.
Okay. No, I actually, I paused because I always assume that when you pop in from Twitch, you have a question or something. Um,
Just one thing.
all right, gotcha. She's just browsing. Terrence says she could be corrupted, but not me. I see you. You are the corrupter, sir. Me?
Finger reader in general.
What? Nah.
Responsible for your comment that you made on Friday.
Mm-hmm.
Is that what you're saying, Terrence?
Verify.
I said, so Duran is responsible for the comment that you made because he corrupted you first. Is that what you're saying?
Wow. I mean, it really is the other way around. Because I used to just come in, teach, and leave. Y'all corrupted me. Let's be clear about that.
I didn't corrupt anyone, okay?
Bing! Are you a part of the Breakfast Club, or are you not a part of the Breakfast Club?
You see how he trying to flip it, right?
I do.
These are the facts, though. I mean, everybody that's
I'm back. You're a part too.
matter of fact, I'm pretty sure Tia will come in and confirm this.
This is a wild card because you're going to say Tiana, and I just
That's all Darren Bloom vacation at all.
No,
It's always there.
no vacations. What is
Kristen, what is this fancy bird vacation?
Yeah, I was about to say the same thing. What is a vacation? What is that? Is this something new? Is this a new trend? Is it the new bell bottom?
He said no.
That means that's still being thought about. It's a fan to me.
Yeah, is this a new thing that they're doing on the TikTok?
It's called TikTok.
I don't have TikTok either.
That's 1,500 people.
Hey, wait a minute, Cecily. I don't have TikTok either, but I'm about to own TikTok. Hey. But we're about to own TikTok, though. A whole another level. You know what I'm saying? That's what we doing.
Influential.
Who said what?
Another level.
That was Terrence.
I get home.
I'm sorry, but
All right, let's
okay, we don't make that.
let's keep going. Let's keep going. Go ahead, Cecily.
Let's look like Devon's kids and all them.
Wow, that's what we doing. You ain't gonna call me the rotten parent. Y'all gonna have to get your stuff together. Then act right in school. Act right in school. All right, so let's talk about this right here. This was the next thing on our list. The 5-day ATR is now flashing red for the QQQ. We've been trading the NASDAQ. I've been highlighting that every single day we have been trading at an increased range. Yes? Now,
Yeah, you said QQQ. We're on TQQ.
No, right. Yeah, same thing.
Okay.
Yeah, same thing. Right. So when this turns red, it is actually so basically we've been increasing our risk throughout every trade, right? So every time we took another trade, if the volatility called for increasing the risk, we increase the risk, right? Now, we have a volatility increase, so volatility picked up, right? Volatility pick up, but at the same time, volatility picked up, but at the same time, it actually overextended itself. So we may start to see these less volatile days. So, this may be the age of the melt up in that regard, if you get what I'm saying, right?
Oh, I'm sorry. What do you mean by volatility overextended itself?
So whenever this turns red, right? So whenever it's bold, that means volatility is contracting. Whenever it's red, that means volatility has expanded to the point where it's overextended. By that, what I'm saying is the range over the past 5 days has now exceeded the average range over the past 20 days. So that's how you went from remember we talked about the Bollinger Band squeeze?
Yes.
So that's how you went from the squeeze into the breakout.
So you've depending on the direction, you're left the upper or lower band. Just wait.
No, you don't look at it like that because you're talking about the average range.
Well, I was just doing the Bollinger Band in my mind.
Gotcha. No. So think of it like this, right? Think of it like the inner the bands that were center are now outside, right, of the bands that were around it. So imagine, I mean, if you want to keep it simple, imagine a cup actually runneth over. Right? It's like, basically we're spilling over, right? Into this higher volatility environment.
Keep it full.
What you said, Alicia?
Say keep it full.
All right, fine. Let's see if we can think of another analogy here.
No, that was good. I understood that.
Okay. That one worked. Okay, that one worked. Okay. Are you saying that was keeping it more simple? You're saying?
Yes.
Yes, yeah. Right. So just think of it like that, right? So basically, imagine you're just filling up a cup, and as you're filling up the cup, the volatility is expanding. Right when it finally runs over, that means, right, we've extended, right, the amount of volatility we can fit within that band. And so now the past 5 days are now more volatile than the past 20. So what do we do here? Here now we actually go to this where you start using the tight stop, guys. Okay. Now that's where you start using the tight stop. And especially if you break out on Monday. All right. So an open higher on Monday and a push on Monday, we swap our 11%, 10% stop loss for a more like 6% stop loss on the T-triple-Q.
Would you call it's 11 and 5.5 without stops?
No, not breakout stops. No, I said no. You have tight. You have narrow. You have a wide stop and a tight stop.
Yes.
All right. Nishant, why don't you try sticking around and listening to the conversation for a little while before trying to change it? All right. If you're still around when we're done discussing this portion, we will get around to potentially talking about gold. All right. I don't mind. I don't mind, but you came, yeah. Yeah, that's my point. Right? You got to listen in. Right now we're talking about the Nasdaq, we're talking about the S&P 500, potential moves going into next week and so on and so forth. All right? So when we're done talking about this, I'll swing back around to talk about gold with you, all right? Now, also next week, guys, we're going to be watching the 5-day trend. Now, I'm gonna make an addition. So remember last week we were watching the 5-day trend to see. Well, not last week. We started this 2 weeks ago, watching the 5-day trend, right? And we wanted to see how that would play out, and how we're going to utilize it for the most part. So we got some clues from last week. A break of the 5-day trend is going to be slightly insignificant, if not accompanied by a persistent, shift in market structure. Okay, so you broke the 5-day trend, but what did not happen? Right, you broke the 5-day trend, but you did not create any shifts in market structure. All right, no shifts happen here. Right, or the least you could have done is on a lower time frame. All right, see this right here that we wanted to watch. So find resistance at this previous point here at least, and revisit some lows. All right, that's the least you could have done. So what I'm going to advise here with the 5-day trend is always, you're going to want to write this down if you can, always look for market structure confirmation.
That's change of market structure, change of character.
Exactly. Yes, ma'am. All right. Look at you. Look at.
I'm looking at it.
I see what's going on. I see what's going on here. So, and also, Alicia, so how about a failure to create a change of character right here? If that would happen. All right. And let's say you created some higher, right? See this? You created this one higher low right here on the way up, right? See that?
Yes.
So boom, you fail to break this high right here, and you break this low instead after, after essentially creating a bearish weekly trend, right? Then what do? You say, okay, cool. I can take that short. My first target is going to be the previous low, and then we'll see where we go from there. Right? If we hit the previous low and swing back up to break the most recent high, right? Then does that coincide with anything that we know from the pivot indicator as well, right? So, am I getting back above any key levels? Am I still below the 50 MA? All that stuff. You see what I'm getting at? Right? Because otherwise, it could just be hitting this level here, and doing the same thing we just did here, right? Which is finding resistance at a previous swing high just to keep going lower anyway. Right? So, okay. So you guys caught your first instance here of if if and when this 5-day ATR turns red, that's when you finally start utilizing the tighter stop. So next week, once we see how the open, right? So you really want to do that on the advance, right? You want to do that on the advance. So basically, as the market makes the first advance, right? It's at that point where you want to go ahead and move that stop to the tighter stop. All right. So from there, we could potentially expect some persistence in the trend, and some potentially some lower volatility as well. All right. So maybe you're just kind of moving within the range. Okay, so $2.53. So that would put us at around 53.52. So $55.05. No, $56.05 actually. So it's like right around this area right here. Right. That's if we were to see that bit of, that much of a move, right? So even if we just kind of approached here, and look at that, 1, 2, 3, 4 days prior right here. So this would be a first sequential move for the market if we can close above. So we just need a little move higher. We don't even need to get all the way to 56.05. We can just get a little move higher. We'll get a first sequential close. And then we can start to go from there. All right. Okay. Any questions at all? Any questions?
I have a question about the trend filter.
Mm-hmm. Oh yeah. Right. You want to explain that, right? So your trend filter. So it's similar to Confluence, as it requires us to be above certain key levels. The difference is Confluence focuses on the support and resistance coming from pivot points. Okay. Whereas the trend filter focuses on whether or not the market should be traded to the upside or the downside. All right. So let me break that down again. So your Confluence is essentially saying, look for support, whereas your trend filter is saying, look for longs, right? So if your Confluence and your trend filter are both in alignment, that's a great deal, right? So now your trend filter is basically saying you can expect that your moving averages may provide some of that support for you, pretty much. All right. So your trend filters are just focused on what side of the market are you on, and the stronger the signal, the more you're actually above the highest levels. All right.
Yes.
No problem. Okay. So I invited him to the stage and he left. No problem. Any other questions? All right, there he goes. Nishat? Yeah, you had a question?
Yeah, I want to ask you that why you are making it very complicated. Like it's very easy to understand market. Like why so much indicators and
All right. Any other questions?
Kitty corn.
So, no other questions? All right. So I guess that's our joint for the day. Now again, I want y'all to keep in mind that we're gonna be what you laughing at, Terrence? I gave him a shot. I gave him a shot. Like, I'm like,
Why are you making so complicated?
Is that because he didn't understand that?
that's always what it is. Meanwhile, we'll be making decisions in microseconds, and we'll be making decisions in microseconds, and he'll be the one analyzing the market for 2 hours. So that's it for the day, I guess. And next week, I'm really gonna see what happens with this monthly trend. So the monthly trend is still intact, right? So we'll keep that in mind. The monthly trend has not been broken. I also want to point out that the 5-day trend is sitting much closer to the monthly trend than it was in previous days. You see that? See the low end of that 5-day range? Sitting real much closer to the low end of the monthly trend than it was in past days. You know. But anyways,
Are we having that stock review class tonight?
stock review class? What stock review class?
Mm-hmm. I thought we were having a stock review class tonight.
Mm-mm.
Cicely, no?
Are you talking about what he mentioned last night, like the dogs of the Dow and the other stuff? That's next session.
No, I thought we were gonna have like just a stock review class. Review stock picks.
Wait.
That's portfolio review. I'm sorry.
Yeah, that's what you're talking about. What you said. You talking about the when I said give people the opportunity to get a portfolio review. That's talking about that.
No, not that. Not that. Okay.
No, you gotta fill us in now.
I
You can't just say never leave the room.
Well, you can't just okay
thought
that.
that was what I was acting, but maybe I'm wrong. I don't know. Maybe I imagined it. No.
Because we did the top 10 last night, so maybe I missed something.
I probably missed something. Don't pay me any attention. I mean, if you want to have another class, go ahead. I'm not gonna make it myself.
So what you're saying is, if I had another class,
Another class.
right? You're saying if I had another class, you'd be here. That's what you're saying.
I'm saying if you were for having a class that I thought you were having,
if I happen to stumble across a list of stocks potentially, what's crazy? I actually totally forgot, Cecily, that the reason we stopped doing the Christmas stocks is because I give you all the dogs of the Dow every year. I forgot about that.
Right. That's why I was like that, we're going to have that class again. Dogs of the Dow, that's just, it's like,
don't count.
the dogs of the
Dogs of the one, yeah.
yeah.
Let's go on our Christmas list. And we're gonna get that list before the end of the year, right?
Yes. Yeah. I am still going to give you all the Christmas list for sure.
And then roll into the continuation, the extra Christmas gift when we go into the January.
Yes, ma'am.
I'm doing for that this year.
That worked all year for me this year with Microsoft. all year.
What was that? What worked on you? The
Yeah.
barometer?
Yeah. She had an insanely nice trade on that, right?
Do tell.
Woo.
Let her cook. So, Venetia?
I should be quiet. Okay.
Hey, she said enough, man. She said all she needed to say, but she said what she said.
She said she didn't like you. Silent.
Anisha came straight in with the pistols.
Y'all, she even
Good afternoon.
yeah.
Oh, goodness. No, so yeah, so we're still gonna do the Christmas list of stocks. So we're gonna, my Christmas picks, I should say. And we'll just do it following Christmas, Moji, because since we're doing a Christmas break,
Okay.
we'll just do it following Christmas. Anisha, I guess I gotta send yours via text, huh? Guess I'll send yours via text.
If you can,
Yeah, I got you.
thank you.
No problem. What you call it? The Christmas list this year is gonna be on. I'm gonna do small cap sleepers, y'all. I'm gonna do small cap sleepers. I'm gonna see if we can find some. See if we can find some small caps down there chilling out.
Excuse me.
Yes, ma'am.
Was Vita Coco a small cap sleeper when you found it?
Yeah, it was definitely a small cap sleeper when I found it.
Can you look at it now?
Yeah, I don't even think Vita Coco was worth $1 billion when I found it. I don't think.
No way. No.
Yeah, wasn't even worth $1 billion yet. It's crazy. Now a multi-billion-dollar franchise.
A question about that actually.
Who's mad?
Say for a stock like Vita Coco that we did, that you identified early,
Mhm.
and then throughout the year, you're not averaging, right? Let's say like 30, then 40, then 40. Now, let's say cumulatively, you've made like a return of like 30% on all of the stocks. But individually, some are 20%, some are 30, some are, so on and so forth. In terms of selling, if they're all still short, would you sell the highest amount? Like, would you again, they're all 20% plus, but would you take the bigger profit at that time? Or would you how would you prioritize that?
If I have profit across my portfolio, the way I manage my portfolio is to bring the allocation back down to what it's supposed to be. And that's why I keep telling you guys over and over and over. And I know some of you guys ain't listened to this yet. All right, now, that's not for you, Moji. That's just for the group in general. I know some of you guys have not taken heed to this yet. You have to pick a specific amount that should be in these names. Now, Moji, you're going to be in the. I guess I'm going to spoil the noodles. Moji will be joining us in our portfolio mastery. Okay. Okay. So you're going to learn about that allocation that I'm talking about in that portfolio mastery. Okay. It is actually going to be so think of it like this, right? So it's going to be based on just what you said. So someone's going to be performing better than others, right? So what the portfolio mastery is going to do is it's going to say, okay, even if let's say you have one stock that's outperforming the market. right? It's been outperforming the market over the past year. Let's say it's Robinhood. Matter of fact, you looking at my screen? Let's go over here.
Yep.
Let's go over here real quick. Let's say we're talking about Robinhood, right? And let's say you have I don't know, 100% return on Robinhood. Let's say, then you have UPS. You have a 100% return on UPS, right? The reality is that when you bring UPS back down to where it's supposed to be, it's going to come back down to a 0.5% allocation. Okay. And Robinhood's going to come back down to a 4.5% allocation. Right? If you think of it from that perspective. So
Wait, so when you say allocation, you don't mean the cost basis, you mean like the percentage you have in your portfolio.
yes. But it's going to add up to the cost basis anyway. You see, for example, see right here? It's telling me how many shares right here. Right? That I want to have. Now this is based on the the arbitrary number that's placed right here. Right? But it's telling me how many shares, right? So basically, not only does it tell you how many shares, but it tells you how many dollars. So when the time comes, right, I'm going to want to buy this many shares, whatever amount is here. Does that make sense? And this number is going to
buy like on it.
No, I'm talking about like, let's say it's time to reinvest.
Uh-huh.
Right? I'm going to stack up my money until I can buy this many shares because I'm focused on my allocation. So what I usually do is I just build up my cash and build up my cash and build up my cash and build up my cash. And then I make one big investment, the whole portfolio. Right? When I do that, though, it's usually when the market is giving me all the advantages. Right? Usually when the biggest names are struggling and stuff like that. You dig what I'm getting at? Right? And then, from there, I'll focus on what you were just talking about. Okay. How much profit do I have? Where am I at? And, all that kind of stuff. I'll focus on that next. But I'm always going to bring it back down to where it's supposed to be in terms of allocation. Always going to bring it right back down. All right. So you'll be learning about that in the portfolio mastery. You shall become a master at this. But
So this is when all of our portfolios go on blast.
what's that?
This is when our portfolios go on blast.
Go on blast? Oh no! That's gonna be an actual like so I'll probably be doing that to like like so I was talking to somebody the other day, right? And you know how I hate to pay for things, right? I'm like, I'm not paying for that, right? Little subscriptions and things like that, right? So somebody I was talking to the other day, one of my it was I was talking to my sister, right? She was like, "Do you subscribe to this?" And I told her no, right? Boss, I'm gonna come to that question right now. Right. So yeah, I told her, I said, no, I don't subscribe to that. I told her, I said, I don't really subscribe to anything except for Robinhood Gold. And, I think I had like one other thing. I can't remember what it was. Right. So it's like pretty much two things that I pay for, and, she was like, why, and I explained, so I said, look, like most of the time, I don't actually need it. It doesn't really fit into the concept of something that I need. She was like, okay, yeah, but she was like, but would it help you with, with your stream thing and whatnot? I said, sure, I was like, but at the same time, I would technically still be paying out of pocket for something that I don't use, personally. She was like, well, why don't you do like something that actually ends up like paying for some of that stuff every year, right? And I said, you know what, that's a good idea, you know. So I'm just thinking about something fun that we can do, Alicia, that that money will probably go towards just so basically I would reward you guys with probably something like who knows, maybe I'll do like a hmm what subscription would you guys like for the group? That's a question. I want y'all to think about that. What subscription would you guys like for the group? And don't say
What can
training.
you get us?
Huh?
That's what I was about to say. Trading bar chart. What can you get us?
No. I meant like a subscription like that would give us like inside information kind of stuff like that. I'm talking about. So basically, this little
Why we
portfolio.
can't say Trading View?
Cause what is it gonna do for us?
Okay, we gotta think about it.
Yeah, it ain't gonna do nothing for us. So basically, what I'm saying is the what you call it, right? So let's say I do this little portfolio showcase thing, right? So let's say somebody, Anisha, maybe pays $25 to put their portfolio up there, right, and have it reviewed. You see what I'm saying? Like basically to take up our time. You know what I mean? And then I can take that money and pay for a subscription that gets information for you guys, pretty much. So you guys think about it. Whatever the subscription is you want, that's the one I'm going to pay for with the with whatever money is coming from that. If we'll see. We'll see how that works, right? Now. Boss, would I manage your so would we manage your position, your up 20% the same way? Yes, I manage it the same way because um you know one of the issues that happens with portfolios when people just let things run and never like re how do I put it, like never reposition or never balance out their portfolio is one stock ends up becoming too powerful. So, I could have a stock that's up, let's say 1,500%. And now that stock represents, let's say, 10% of my entire portfolio. I think we have to remember that money is one thing, right? Okay, I made money. That looks good. But on the other end, I have to think about my portfolio as it pertains to the performance. And that's going to sit outside of how much money I made. So I could make $1 million, and then by the end of the year, I could be negative in my portfolio because, one stock took back all the gains, for example. Right? So you kind of want to think about your performances. That's how I think about it. I think about my performance. Right? And the like monetarily, money wise, that actually plays out better in the long run. Right? That actually plays out better in the long run because when I move that cash aside, my portfolio stabilizes and I'm able to hold on to more of my returns as a result of balancing my portfolio out. So like I said, if I let one portfolio grow, it's almost like allowing a tumor to grow. Right? Eventually that's going to kill you. You understand? So you have to think of it from that perspective, brother. And I've experienced it in the past. That's why I stopped letting it happen. Right? You make this really great investment. You put a certain amount of money in there. The investment blows up. It becomes really, really great. It's a really great investment. Then one day people sour on the investment. right? They sour on the investment, and then guess what happens? That stock drops 30%, and it was 30% of your portfolio. So one stock just took you down by 9%. One stock takes you down 9%. I don't think that's worth it. I don't think it's worth it. Right? Like I'm not only interested in seeing the numbers, I'm interested in seeing the end result. Right? And I hope you guys all understand that that's why I frequently have talk to you guys about when you're going to take your profits and things like that. It's not worth it in the end. If I got to look back at my portfolio and I got to see if I'm underperforming, I might as well just buy the SP 500 if I'm going to be that passive. Right? Just like Warren Buffett said it, just buy the S&P and walk away. Right? Buy the Nasdaq, walk away. Right? Because what does it matter at that point? Hopefully that explains, boss. Um, Anybody else? Any questions before we close out? All right. Don't forget next week, objectives. Objective number 1 is if the market opens higher, we are going to be shifting to the tight stop. So you're going to move that stop loss from 10% to 6%, right, on a higher open. Right, and more specifically, a higher open, and a push higher. Right, so maybe you can wait until like 11:30, make sure the market's actually moving, moving higher, and handle it from there. Right, so that's going to be one of the first things there. Secondly, now that we have the 5-day trend ticking off, we're going to watch for when we actually finally close above the high end of the 5-day trend. And then we're going to watch for the market to defend the next pullback. Okay. So once the market once we break that 5-day trend, look for so basically you're going to start saying what's the next level below that, right? So you have this key level right here, 54.69, right? And what do we have below that, right? You'll probably be about 54.79 after that, right here. And we'll see what other levels are below it that we can, focus on. All right. I'm not going to send the version out immediately when I do the 8-day PPMA. Yeah, Nisha, you missed that one. Don't shoot until you hear the whole story. 8-day SMA is going to become the 8-day PPMA. All right. So we're going to be testing out pivot point moving averages instead of standard moving averages for the 8-day. Right. Which is going to be essentially the average fair value over the past 8 days. So nothing's really going to change. Like I told them, nothing's really going to change as far as like, that's going to be one of the things we're going to be testing out. And we might end up getting our own, RSI. That's going to be interesting. I'm going to be studying a few DeMark indicators, and we might end up getting our own little RSI to look at. Alicia, so that'll be pretty dope as well.
Oh yeah, I like the RSI. That'll be awesome.
Yeah, it's not going to be calculated exactly like the RSI, but it's going to be something similar that can be right here. I'm probably going to drop it right here, somewhere around this area right here. Just kind of bring this down a little bit, I just drop this one notch right here. I'll probably just drop that right here, right below the 5-day ATR. I'll just drop it right there. And it'll be very similar to the RSI. So from a 0.3 to a 0.7, all right, it's going to be your range that you're watching. So you can see if it's hitting 0.3 while it's hitting the 50% retracement, that'll be oh man, it's going to be beautiful. All right, so it's going to strengthen the range retracement. Is what it's going to do. It's going to strengthen the range retracements. So I'm gonna look forward to that. I'm gonna be studying it over the weekend, and then we'll go from there. All right, guys. I will catch up with you guys, I guess, for the Division 1 guys. I will see y'all tomorrow. Anisha, did you see the study guide? I put the study guide in the chat.
Yes, I did.
All right. That's really the first draft when you think about it. I'll probably have a secondary version that I'll give you guys next week. All right. But I just wanted to get it to you guys early. So, and I, let you guys up out of here early so that way y'all can, study that a little bit when y'all get some time. All right. But anyways, everybody be blessed. Stay well. And we'll talk soon. Later.
Thank you. Thank you so much. Later.